It's Wednesday, the 1st of November 2023. Welcome to the Fast 5 by Fear and Greed Business News, where we give you the top 5 business stories you need to know in just 5 minutes. I'm Adam Lang, and good morning, Sean Aylmer.
Good morning, Adam.
Sean, story number 1. It was a day of mergers and acquisitions and shareholder activism on the market yesterday. First, Australian Super, a major investor in Origin Energy, said it will reject the $18.7 billion takeover offer from Brookfield and partner EIG, putting pressure on the consortium to lift its offer.
AusSuper has 13.67% of Origin and is its biggest shareholder. With the deal needing 75% approval at next month's vote, there's a real risk AusSuper could derail the takeover if a higher bid isn't offered. AusSuper said the current offer remains substantially below its estimate of the long-term value of the company. It took issue with an independent report's assessment that said the transaction was within its estimated range for the target. The bid from Toronto-based Brookfield and Washington-based EIG is valued at about $8.81 a share. Origin's share price have traded above that range since the merger was approved by the competition regulator. That suggests investors think a bigger offer is coming. Now, Origin's share price ended down 0.5% yesterday, but still trading at $9.13, which is above that $8.81 offer price.
Sean, there was another big bid yesterday. Treasury Wine Estates announced a $1.6 billion bid for high-end Californian winemaker Dow Vineyards. It wants to turn the vineyard into a global brand.
Treasury owns Penfolds, which of course is definitely a global brand, and boss Tim Ford yesterday said Dow could also follow the same path, particularly via its high-quality Cabernet wines. At the moment, it's very much a US brand. 98% of its sales are domestic. Mostly, it's in that $20 to $40 per bottle price bracket. About 13% of sales are for wines priced above $100 per bottle. For those, though, that have a long memory, beer group Foster's used to own many of Treasury wine brands before they were split off into a separate company in 2013. Foster's paid $2.9 billion for Californian wine group Beringer in 2000, and shall we say, not a great purchase. Yesterday, some analysts immediately questioned why Treasury would double down on a market it isn't actually doing that well in.
Sean, story number 2, the Commonwealth Bank's mortgage book has shrunk for the third month in a row, the first time ever.
We spoke about this a month ago when it was 2 declines in a row. Most people expected the country's largest home lender to step up its competitiveness to regain market share, but instead the Commonwealth Bank kept an eye on its profit margin. The bank is losing mostly in loans to owner-occupiers, though it remains the biggest lender by far with 25.4% of the market. It's lost about 0.4 percentage points since June. Doesn't sound like much, but we are talking in hundreds of billions of dollars here. Westpac has lifted its market share to 21.4%. NAB's constant just under 15%. ANZ has improved its market share to about 13.4%. Going to be very interesting to see if Commonwealth Bank's comfortable with a fourth month of losing market share.
Sean, story number 3, Brisbane-based fast charging company Tritium listed on the Nasdaq 2 years ago with a valuation of $2 billion. Now it's asked the Queensland government for $90 million to help with its liquidity issues.
Yeah, Tritium certainly made plenty of noise about developing fast chargers for electric vehicles. Its listing was celebrated, but now the company's worth around $60 million, a long way below $2 billion. Boss Jane Hunter told the Financial Review the company didn't raise enough money up front and now has liquidity issues. So while revenue jumped to nearly $300 million last year, costs soared. The company warned it may have to close its Australian factory. It also has a factory in Tennessee in the US. The federal government's National Reconstruction Fund may have been an option, but it won't be ready in time for Tritium to access.
Story number 4, Apple yesterday announced a new iMac, MacBook Pros, and the third generation of its in-house Mac processor line, which boosts performance and graphics horsepower.
The new chip lineup relies on advanced 3-nanometer manufacturing technology and more efficiently handles graphics processing, according to a report on Bloomberg. The base model has 8 main cores, and a core is the processing engine on a chip. So 8 main cores in addition to 10 cores for graphics. Massive. New MacBook Pro models will run the new processors. The chip technology will make the new laptops more powerful while retaining their 22 hours of battery life, according to Apple. The M3 launch is meant to help restore Apple's advantage in the industry and get the Mac business back on track.
Sean, a stunner at story number 5. A year on, and X, formerly known as Twitter, is worth less than half what Elon Musk paid for it.
Musk bought Twitter for $44 billion, but based on stock awarded to employees, it's now worth about $19 billion, according to Bloomberg. Since the takeover, most of Twitter's staff were laid off or resigned. Musk renamed the company X, changed some of its content rules, and lost more than half of its advertising revenue, 60%. In fact, Musk's purchase saddled the company with $13 billion in debt. His erratic decision-making and looser content safety rules have driven away advertisers. X also owes about $1.2 billion on interest payments each year because of the debt. He had hoped to shift towards paid subscriptions on X, but so far less than 1% of users have signed up to monthly premium service. Some way to go there for Elon.
That's it. The top 5 business stories in 5 minutes. Thank you, Sean.
Thank you, Adam.
It's Wednesday, the 1st of November 2023. Remember to hit follow on the podcast, and if 5 minutes isn't enough, then find our longer podcast called Fear and Greed on your favourite podcast platform. I'm Adam Lang, and that was the Fast 5 by Fear and Greed Business News. Have a great day.